Good afternoon, good evening, and good morning. My name is Ellis Martin. I am the CEO and senior editor of the Ellis Martin Report. We are a radio show and podcast featuring the mining sector to an audience of investors of all kinds, retail, family funds, and what have you, sourced through Yahoo Finance, Bloomberg, Thomson Reuters, TMX, throughout the world to an audience of about 7 million people. And I'm pleased to welcome you on behalf of Minds and Money to an amazing pitch battle that we're going to have right now. We will be featuring 4 mining companies today: Silver Tiger Metals, Western Copper and Gold, Consolidated Uranium, and Clean Air Metals. Each mining company will have 3 minutes to state their case, make their pitch, and ultimately convince investors why they should risk $1 million of their money, play money, by investing it with their company. Today, we will be covering a variety of metals and opportunities ranging from silver, gold, and copper, uranium, as well as battery metals. Keep in mind, management, project, economic viability, share and/or capital structure, and jurisdiction are all important factors in selecting the right opportunity. The most important component of any public or private entity, for that matter, is the skill set of the CEO as a presenter. At the end of the day, it's a pitch. In this business, we are all salespeople. So talk to us, inform us, charm us, convince us. After each segment presentation, we are allowing 8 minutes for the panel of investors to question each CEO. As we've seen in the past, I expect these questions to be as direct as possible. Pull no punches. Let your skepticism and/or optimism fly. After all the presenters have pitched and have been grilled by the panelists, we will ask the investor panelists to make their choice and cast their vote for the $1 million. If there's a tie, and I certainly hope there isn't, I will cast the tie-breaking vote. We are pleased to introduce our investor judges as follows: David Twist, partner with AMED Funds; Warren Irwin, president and CEO of Rosseau Asset Management; David Lotan, chief investment officer of LHI Capital; Jennifer Schell is a partner, portfolio strategist, and associate portfolio manager with Treegrove Investment Management; and Gwen Preston is the founder and editor of the resource Maven. Let us now begin the pitch battle. We're going to start with Gwen Jessome, the Chief Executive Officer of Silver Tiger, why can't I say that word?
Boy, that's a tongue twister. Silver
Tiger Metals, you say it, go ahead.
Just call it the Tiger like everybody else does. It's easy. So folks, look, thank you for taking the time to hear about our little company. I'm not a geo, I'm a securities lawyer. I build public companies. All on the TSX, TSXV, work closely with that exchange on their national advisory committee. But boy, the reason that I've had a lot of success in my career is I've been building for our little group out of Halifax some powerful mining companies for 30 years. The last 2 we built, the group Go Gold, some of you may know that one, about $1 billion market cap. We started that one at 10 cents. We've been in Mexico for almost 30 years building mines, our team. And the true junior is the Tiger, and she's coming up hard, quick. $200 million market cap. Only Mexico is where we are. This is a 35,000 hectare land package, 35 kilometers long. We're just starting on the middle couple of kilometers. It's gone real well. Go look at our chart. If you're an investor, you should look at our chart as a junior. We've done very well in a very tough year. The reason is we deliver results. High-grade silver and gold continually every couple of weeks. Drill off and add big high-grade silver ounces and move it towards economics. But we only do one thing. We don't do this to drill holes. We don't do this to add ounces or to sell it to somebody else. We build mines. We've been doing it for 30 years. This will be the 5th one. This will be a mine sooner than a lot of people think. We've had some great success. Look at the quality of the investor. You want to be with investors? Our last bought deal financing at 60 cents. It was Franklin Templeton, Steve Land, out of Frisco, Peter Merck, Miletus, Ranjan, Libra Funds out of New York, Sparta Asset Management, Maria Shmurnova, and public also, as we did a big cross last summer for 7 million shares at 70 cents. That was Van Eck. 60 cents, we raised that money at no warrant last April. 23 million, 18 in the bank, 6 drills turning. We're going to build a mine, and capital is unlimited for us at the very top of the food chain. So when you go to invest, we'll look at our chart, look at how we performed, not this year, for 25 years, check our track record, and come along with the investors I just talked about that are funding our business. That's Silver Tiger. I'd be more than pleased to answer any questions you might have about how, where, and what we're going to do. But I reiterate, we are going to build a mine here. That's not easy to do. Most people don't.
Thank you very much, Glenn. We very much appreciate your presentation. And now I'm going to go right to the judges. We will begin with questions from David Twist, partner with AMED Funds. David? All right, well, let's move along to Warren Irwin, President and CEO of Rosseau Asset Management. David can join in later if he'd like. Warren?
Silence. I've answered all the questions.
That's fair.
I think they need to.
I thought I'd spare you the question, Glenn, there. But anyways, I don't have a lot of experience with Gold or any of your previous companies, and this is the first time we've met, I believe. But can you tell me what you're trying to drill out here in Mexico? What area of Mexico you're in, and what type of? I imagine you're narrow vein silver. Can you explain kind of what you've got, what you're drilling out, what your goals are, and what area of Mexico you're in?
Yeah, look, you know, can you guys see my screen? I think on some of the questions, short time, let's pictures, you know, I got a million words. I love to talk, but I think pictures will do a better presentation of it. So there we are. We're in Sonora. We built mines in Durango, in Chihuahua in our time in Mexico, as you see, but this is Sonora, beautiful jurisdiction for mining, 100 kilometers from the US border. I don't get lost just on the fact that we got narrow vein silver, a la epithermal systems in Mexico. What we're really starting to see, we've got bulk tonnage from surface, then you go underground for the narrow vein silver, high grade quartz and silver veins, and basically, excuse me, but what's really been evolving here, and you got to pay attention, look at those last 3 or 4 press releases we've had. And evolving here is a shale unit, a horizon throughout all this project. And I mean, you can see what we've been drilling lately, guys. Nobody's drilling high grade like at the Tiger. I mean, the last 2 press releases ago, just before Christmas, 82,000 grams per ton silver. That was within 17 meters close to surface of 2.6 kilos. So we can't just say narrow vein silver. Look at the press release today. That was on the Sui vein, 3 kilos. That's a regular hit up there, a couple of meters of that. But we're seeing 15, 20, 10 meters of all north of a kilo. So what you're seeing is narrow vein silver. You're seeing it within wide blowouts in this shale zone. Very exciting, very economical mining. And we're pretty excited about what, especially the last 6 months, has really started to reveal on this mountain.
Oh, thank you.
Let's move along now to David Lotan, Chief Investment Officer of LHI Capital.
Hey, Glenn. How you doing?
David, good to hear you.
Good to see you again. I looked at this story when it was called Oceanus many years ago, and
that's right.
Met you and Dave Duncan back in Toronto, and I think maybe this property is new. Was the Oceanus property something different?
Yes, it was back in the day. We just got that one as my security lawyer. Got a little project in Mexico, tick the boxes on the 43-101.
Yeah, good.
Get public and then get after this one. 2018, hostile takeover, a little company called El Tigre Silver. I did. Right. We acquired this one and delisted the company. I got the asset.
Good. Well, I was really encouraged to see these Crackle Brescia areas in the shale horizon, and it seems like where the veins hit the shale horizon, you're getting blowouts up to 20 meters, at least on the footwall side. Is that correct?
We're seeing it now. And, you know, when we started talking so much, it's new discovery. And I got to tell you this, David, what took us there? Think about high grade. This is what really why I bought that public company and delisted it. The old timers were in there, but this was an old mine, folks. You'd have to understand there's no new discovery in Mexico. Everything's around an American or an old Spanish mine. But they were in there for 20 years, 1910 to 1930. They took 100 million silver equivalent ounces out, David, almost 2.5 kilos. They did it with a 100-ton per day mill for 10 years and a 220-ton per day mill for the last 10 years. You imagine the grade. So what we've done is we've got all those veins that they mined. They nicked the surface, took a couple of percentages of them. But what we've seen and on the screen right now, it hasn't switched for some reason. I wish it would. There it goes. You can see it now. what we've discovered, and you nailed it, David, is where you see the high-grade quartz vein going through basically this shale horizon. You're getting, look at this beautiful result. That was 2 weeks ago, 2.6 meters of almost 5 kilos. But look at the blowout out in that shale horizon. And that's across the entire project, this horizon. That's a game changer.
I've got to interrupt and bring it. I've got to interrupt and bring in the next panelist. Sorry about that.
Thanks, Glenn. I think that's very significant. Really appreciate
absolutely.
that.
I will be interrupting as rude as it is. I apologize for that. Jennifer Schell, please join us and ask your question.
Thanks, Glenn. Looks like it could be your year, isn't it? The year of the tiger.
I'm not sure, but it sounds good to me.
So I was wondering if you can touch on some of your ESG initiatives, some of the infrastructure, environmental impact, and your relationships with the community.
Well, a couple of things on that. Let's go community first. We've been in Mexico almost 30 years. So the first thing you have to do is you have to interact with your community. Look, this is so clean for us in Mexico. Everything we've dealt with in all our mines we've built, there's been ejido, native peoples to deal with that have been there. You have to deal with all kinds of rights. This is mining country. We have this 35,000 hectares and there's no ejido. So it's all ranch land. And I bought, the middle 7,000 hectares of the 35, I bought the land rights. So really where all our exploration is, I have all that. And we have agreements with the ranchers for all the rest. But look, we do so much. We work with the town of Escada, 40 kilometers away, a real mining town. We interact with the community, all of those things we do. So we're very familiar with the cultural side of it. But on the ESG, when you start talking environmental, of course, we talk about social. We got a little ahead of it as a junior. We're a small company, $200 million market cap. But what we did is we hired all the proper consultants this summer. You can go on our website. You can see that we put forward our ESG plan, documented as advised by some of the top experts in the country and also in the United States, and how we're going to roll out not only our exploration. That's easy. I'm sorry, it is easy because you just have to. But we're now looking at, we're going to build a mine here, and we're already planning 1, 2, and 3 years how we do that in an environmentally, socially correct manner.
Thank you. Gwen Preston, your final question, please, for Glenn.
Absolutely, Glenn. Nice to see you.
Always good to see you, Gwen.
Why right now? So you've already discovered the shale horizon. That's, the market has already accepted that you've got these blowout zones with this grade. Yeah. Why right now? Why this year and this moment? What's happening in the near term that might move the share price?
Well, I'm going to share a little bit with you here. And I think it's now time to move the Tiger to the next level. We're going to drill off ounces on the Sui. You can see how we filled that in over the last year. We're going to then switch over and drill some of that. I mean, some of that grade we're drilling over on the sites Kelly has been incredible. 82,000 grams per ton silver, 1.3 kilos gold. That's going to add up quickly, going to not drive the ounces in by the end of the year, move it towards economics. But I'm going to share something here. It's not confidential. What we want to do now, Gwen, is we got to get underground. We have already hired the contractors. As you know, back in 82, Anaconda went all through that mine, safe as anything. We've drained it down to level 7. The contractors are now on site. Same contractors Silvercrest used, same contractors we used back at our first mine at Ocampo. The son is now running the father's business, and our scoop trams are on site. We're going to start hauling that Rossaga out. That's about 3-4 grams per ton. Their waste rock gold. Start piling that up, and it won't be too long. Maybe second quarter, for sure third. We're going to walk right over and put our hand on the site's Kelly vein and touch that 1.3 kilo. And what's next? Underground drilling from the sites Kelly. That's where we're going next. So
Thank you very much.
It's moving fast.
Thank you very much, Glenn. Great presentation. Appreciate your time.
Thank you, guys. Appreciate it.
Next, we are going to hear from Paul Westsells, the President and Chief Executive Officer of Western Copper and Gold. Paul.
Thanks, Ellis, and thanks everybody for tuning in and listening. Paul Westsells, President and CEO of Western Copper and Gold. Western Copper and Gold has one asset, the Casino Copper Gold Project, located up in the Yukon, Tier 1 mining jurisdiction, a real emerging mining area of the world. I'm going to talk about 4 key things with Casino. First of all, copper. Second of all, size. Third, the economics. And fourth, the community support. So first of all, let's talk about copper, because there's a wide range of commodities that are being talked about right now. I'm telling you that you want to be into copper. I have been with this company developing this project for over 12 years. I've never been as excited as I've been now about the copper space. You're seeing copper at 450. You don't have a lot of projects out there right now. They're predicting a 12 million ton deficit over the next 10 years. When you look at that, a project like Casino, that's 150 mines the size of Casino. No one knows where the copper is going to come from, and that's exactly what we have. Next is size. We're talking about, with Casino, the 5th largest undeveloped copper gold project controlled by a junior. I'm not going to talk about number 1, 2, and 3, and they've got a lot of hair on them. We've got a really nice clean asset with the Casino copper gold project. That's the combined copper gold. When you look at just the gold, with 21 million ounces of gold and 11 billion pounds of copper, 21 million ounces of gold puts it in the top 10 undeveloped gold assets. An absolutely tremendous asset. Next is economics. And I always like to point out, the goal of a mining company isn't to make gold or copper, it's to make money. Your asset needs to add up, your project needs to be positive. We have a PEA that's 7 months old, IRR on the project at base case metal prices of 19.5% to 2.3 billion net present value. You move that to spot, 450 copper, $1,800 gold, you're looking at a 4 billion net present value and a 26% IRR. And so obviously very, very key in terms of economics. Next is community support. These big projects, you can take a look at them around the world. The ones that are going to go forward are the ones that have the support of the community. We've been up there for 12 years. I've personally been up there for 12 years. We've won a number of environmental awards. We've got good relationship with the First Nation. All that sort of came to fruition where the Prime Minister of Canada came up to the Yukon, made an announcement of building a road to our mine. But I'd like to finish off by saying I'm not the only one that thinks this is a great asset. 7 months ago, Rio Tinto made a strategic investment into the company for one reason, to have a good look at the project. It's an 18-month arrangement that we have with them. They're going to come in, do some due diligence, and then we'll sit down and talk about next steps.
Thank you very much.
Almost done.
Thank you very much, Paul. That's your time. Really appreciate the presentation.
Perfect.
And our first judge, David Twist, has some questions for you.
Yeah, Paul, what's the CapEx requirement of the project? These numbers are normally pretty big. What's your CapEx requirements?
Yeah, so I mean, the capital cost is 3.2 billion Canadian, or another way to, obviously another way to look at it is 2.6 billion US. And, you know, it depends on your view of the world. I mean, this is a large copper or gold project. If you look at similar sort of projects, I mean, you look at Quellaveco being built by Anglo right now, that's around 5-6 billion. So we're actually, I think, in a sort of reasonable size capital cost. And if you look at a good corollary for, let's call it Northeast or Northwestern Canada, you look at Mount Milligan. Mount Milligan was built for about 1.6 billion. That's a few years ago. We're a little bit bigger, but, you know, with similar sort of labor force, everything else. Obviously, this is, you know, in the future. So that's about what you would expect for a mine of this size.
Warren Irwin, you have a question, hopefully. Warren?
You're on mute.
Once again, my apologies. Yeah, I'm also a big shareholder in another large undeveloped play like yourselves. I imagine your situation, the copper porphyry. Can you comment? You have not mentioned the grade of the copper and gold and copper equivalent would be great, and that would be excellent. Thank you, Paul.
Sure. I'm just going to throw up my screen here really quickly because there's a couple of things on grade. I mean, the overall grades are shown here. There's a cap on the top, which we mine at first, 0.3 gram per ton gold equivalent. The grade of the overall resource at 0.36 copper equivalent, you know, no one's going to get really excited about that. But what is important is to understand the core zone, which I'm showing here. And that core zone, if you look at when we sort of dive into that, and this is the drilling that we did with Rio on that, So if you begin to look at the grades over the first 4 years when you're mining that core zone, you're actually 0.72 copper equivalent. And then the first billion tons, which is the first phase of the project, is close to 0.5. And then you get down into your sort of point, a little under 0.4 for the overall resource. So yeah, it's low grade if you average it all out. But the thing that's unique about this is that early high grade, and that early high grade, I mean, that's close to 200 million tons over the first 4 years.
Okay. What other operating difficulties you're going to have in the north? Obviously, this is a low grade deposit, and I could see where they could run in, whether it be an open pit mine in Arizona or Nevada. You're dealing with some pretty cold climates, a lot of snow, a lot of precipitation. What sort of other additional operational challenges will you have versus one in more of an arid environment?
So 3 things: cold, absolutely not going to deny that. No snow, no precipitation. This part of the Yukon is actually semi-arid. So think of it actually more like a cold version of Arizona than, and particularly those sort of, operations where you're in northwestern British Columbia. That's a different, when you're close to the coast and you get 10 meters of snow, that's an absolute different thing. I mean, operating an open pit in the cold, this is pretty, this is done all the time. I mean, think of Detour. I mean, in our neck of the woods, we've got Victoria Gold. These are all pit operations. Mining and operating under those conditions is very, very straightforward.
Okay,
Thank you very much. And good question, Warren. Dave Lotan, Chief Investment Officer, LHI Capital.
Hey, Paul. Followed the project for a lot of years. I thought that the ratio of capex to NPV was out of whack, with the capex being higher than the NPV. But really impressed by the investment from Rio Tinto. There's all kinds of rumors about what's going on with with what used to be Kaminak, with the Coffee Gold project in Newmont up there. And obviously, I think that there were purported to be some synergies. So what's going on there, and how does it affect you?
Yeah, I'll just, for everyone's benefit, I'll just throw up a map here. Yeah, I mean, unfortunately, I can throw in some more rumors. I mean, everyone thought it was for sale. Obviously, they haven't sold it. I mean, what I can say is that they had a pretty good program there last year. I think they're planning on doing stuff this year. But just for everyone's benefit here, I mean, so this is Newmont's coffee project shown right there. Everything in green are their claims. We're everything here in orange. There's tons of synergies. That's a heap leach operation. We've got a starter heap leach. Obviously, I mean, coffee, last time I saw, was 2.3 million ounces of gold reserves. We've got 21 million ounces of gold overall. We got a feasibility coming out. The reserves will be 10 million plus. Obviously, we're much more of a Newmont-sized project. We know them well. Obviously, we've got a great relationship right now with Rio, but we know the Newmont people as well. And so, we'll see. This is going to be an exciting year.
Very good. Thank you very much, Paul and Dave. Jennifer, it's all yours.
Hi. So could you talk about your tailings management strategy? I noticed that you put a lot of work into that.
Yeah, we did. I think I've got it. A slide here. Oh, no, what's up? Yeah, I mean, these projects, I mean, it's always, I think what's interesting actually is what Rio has focused on. Rio has focused on 2 things with this project. One has been, First Nations community. That's been a huge focus of what they've been looking at. And the other has been tailings, I think for obvious reasons. So we, in 2018, sat down with the First Nations, the Jessome, which is the regulatory agency in the Yukon government, with a clean sheet of paper, came up with a number of options to deal with tailings and mine waste. Spent 2 years, close to $1 million, just sitting there talking, going through all the different options to come up with, what was an eventual design, which has the support of those First Nations and those regulatory bodies. And that's what we have here. It's still a conventional tailings facility, but the key is that it's actually operated as a dry facility. So there's essentially minimal standing water during operations, which results in a much safer facility.
Thank you very much, Jennifer. Great question. Gwen, the final question for Paul is from you.
Gwen, you're on mute.
Gwen?
Gwen, you're on mute.
Sorry, guys. Hi, Paul. Nice to see you.
to see you, Gwen.
Similar question to what I asked Glenn at the end there, which is the why now, specifically for you, the permitting timeline. I mean, because of tailings redesign needs, this permitting process has been very drawn out, and certainly catalysts for development or corporate interest would seem to relate. So what's the timeline? What's this year? What's the permitting setup?
Yeah, I mean, so certainly if you look at the permitting, it's not a why today. I mean, that's not going to make you invest today, because the permitting timeline, we're looking at getting our applications in at the beginning of next year, and then we've got sort of 2-3 years after that. I mean, the why now, there's two reasons. One is copper. I mean, interestingly, last year, we had a very good year. I mean, our share price essentially doubled. We had a bigger increase with the movement of the copper price than with the Rio Tinto investment, which is almost shocking if you think about that. We are incredibly leveraged to the copper price, and I think everyone is a copper bull, and I think over the next year, it's going to be really exciting. The second is really around this Rio Tinto investment. I mean, I can't emphasize enough, this is a different, I mean, the details on this, the arrangement we have with them, it's 18 months. That 18 months is over at the end of the year. The idea is that we have negotiated whatever the next step is before the end of those rights. And so that's going to happen soon. And obviously that would be transformative regardless of the deal for Western and for the share price.
Thank you very much, Paul. Great question, Gwen. Fantastic presentation, Paul Wessels. Thank you very much. Our next presenter is Phil Williams. He is the chairman and CEO of Consolidated Uranium.
Thank you. Here to present Consolidated Uranium. We're a global uranium developer with near-term production potential in the US. We've been around for just 2 years, but we've been aggressively acquiring projects. We now have added 13 projects in 4 jurisdictions since early 2020. Why should you be looking at Consolidated Uranium? For these 3 reasons. It's the right strategy. Uranium has emerged from a 10-year bear market, and we think that has a lot of legs from here. Our consolidation strategy was proven in the last bull market and generated outsized returns. Going forward, we're focused on project advancement and growth through continued acquisitions. We also have the right team. The company was originally founded by the leaders behind NextGen Energy and Mega Uranium, 2 names that many people will be familiar with and leaders in the space. Since I joined the company 2 years ago, we've added significant experience both in uranium, mine finance, and more recently on the technical side. My background is 15 years in the uranium space. I've been to over 100 projects around the world. And now after these acquisitions we've completed over the last 2 years, we have the right assets. We have a diversified portfolio of projects across geography, stage of development, and deposit type. We have assets in top uranium and top mining jurisdictions. And then with the most recent acquisition of the projects in the US, we have past producing mines positioned for rapid restart when uranium market conditions improve. Finally, we're well funded with over $30 million in working capital to execute on our strategy, and we think we're going to outperform in this current bull market. This is a snapshot of the portfolio of projects. As I said, we've acquired projects in 4 jurisdictions: Canada, Australia, the US, and Argentina. We have a critical mass of uranium at over 100 million pounds of historic resources. We also have a significant amount of vanadium in our projects. We have over 225 million pounds of vanadium across these projects. The focus of the company is on the past producing mines that we acquired in the US. Those are in the dark green labels on the left-hand side of this map, and on the high-grade Matouche project in Quebec. Where do we think we can go? If we look at our share price and we look at the share price of the original Consolidated in the uranium space, at the top here is Mega Uranium. This is their share chart from the period from January of 2005 to the end of 2006. The share price went up 3,400%, and the market cap went from 15 million to 940 million because they completed a number of acquisitions and raised money over that period. Our 2-year chart, which is at the bottom of this page, is a similar trajectory in the sense that we've completed a similar amount of acquisitions, raised similar amount of money, but we're only halfway to the bull market in uranium price that Mega was then. Our market cap's gone from 2 million to almost 200, but we expect the uranium price to continue to run, and our market cap has a lot of room to move from here. Catalyst for the company going forward. We've announced a spin out of a company called Labrador Uranium. That's going to be completed next month, and that company is going to be listed. CUR shareholders will get their pro rata share there.
I'm sorry, Philip, that's your time. Apologies.
No problem.
And we are going to David Twist first, partner with AMED Funds.
Yeah, I'd be interested to know which is your priority target. It always worries me when I look at investing a company with a lot of targets, because you think, how's the money going to be spent and what's the dilution going to be? So what is your priority target and how close is that to production?
So our priority targets are in the US. It's the projects on the left-hand side. These are past producing mines. They were in production in the past bull market. The most recent mine, Dineros, shut down in 2013. Our focus this year is going to be getting these assets back to production ready. So that's drill programs at the three main projects, Toniam, Rim, and Dineros. And they could be in production in less than a year. They're fully permitted. They're on care and maintenance right now. They're fully developed. And we have a toll milling agreement with Energy Fuels, which owns and operates the only conventional uranium processing facility licensed for operation in the US, which is in trucking distance to all of those projects.
Okay.
Warren, great answer, great question. Warren Irwin, you're next.
Full disclosure here, I actually own some shares in Consolidated Uranium. Two questions for you, Phil. We've had Sprott in the market buying big chunks of uranium on the spot market, and in other cases from other sources, to soak up some of the sloppy spot market. And we've also had, the issues with respect to Kazakhstan and possible production issues there. We've had a lot of really, really bullish things happen to uranium, yet uranium seems to be still hanging around the low 40s. Why do you think this is the case, and why do you think where do you think all this secondary supply is coming from? Because I'm shocked, frankly, that there's this much secondary supply just keep hitting the market and buyers haven't panicked yet, given the lack of supply from Western sources and then having their Eastern sources in such disarray right now.
Yeah, look, I mean, I don't know exactly where it's coming from. I'm equally as shocked as you are that the price hasn't gone higher, but certainly in a prolonged bear market, I think there's a lot of material that have been sitting on the sidelines. I think we're toward the end of that material being able to hold down the market. And this year, I expect to be a very big year. I mean, the latest numbers that I've been looking at, we're 90 million pounds short in an annual consumption of about 200 million pounds of material. That's just for this year. So it's coming.
Yeah, well, the production profile looks terrible. The other question is, of these properties you do have, what sort of level do you think you'd start considering bringing them on production? I know you're getting everything ready for higher prices, but what sort of term price would you need? And where do you think spot would be at that time for you to get things fired up and get going with production?
Look, I think we need a $50 to $60 price at a minimum to start to move these ahead. And I think the whole industry should show prudence in bringing things on too fast into a lower price environment. And we're not the only company that needs higher prices than the current price. We simply cannot provide enough production at current levels. So it needs to be $50 to $60 for us to even consider moving these forward.
And that would be a term.
Dave Lotan, it's you're next. Thank you very much.
Hey, Phil, good to see you again.
Hey, Dave.
Hey, Phil, well-organized company, not unexpected for you, high quality. One question I have for you, though, is as a former Strat Echo investor, having watched poor Guy Hebert bury himself in the Matouche project and with a $190 million lawsuit with the province. It's a beautiful asset. We all thought that it would move forward. It was blocked. I think potentially by a single First Nations individual. What's the prospect for getting that moving forward with the province, or is that just something that you don't ascribe a lot of value to in the company?
Yeah, I mean, look, we're taking a very slow and measured approach there. It's a tremendous asset, very high grade by global scales. We think it's got unbelievable potential. We have to get it right. It was gotten wrong.
So did Sentient.
Yeah, no, for sure. But so I think for us, it's an asymmetric risk reward profile. We bought it out of bankruptcy for $10 million. It had $100 million spent on it and was worth 400 in the market, in the past bull market. So if we'll go slow and steady here, trying to make inroads with the local communities to see if we can convince them that 10 years on, and with everything that's happening with nuclear becoming part of the climate change solution and the ability for us to operate a potential mine there safely and to the highest environmental standards, that we might be able to move forward on it. But the prize is big enough that we're going to put the time and the energy into it.
Thank you very
Yeah, no, I
much,
think
Dave. Sorry, we have to move along. Jennifer Schell, please, with your question.
Yes, thanks, Phil. So what are the near-term catalysts that should make me bullish on your project?
So these are the catalysts here. Thank you. So we're spinning out Labrador Uranium. Shareholders that own shares of CUR after the vote on February 3rd will get their pro rata share of those. We think we're going to get included in the biggest uranium ETF, which is rebalancing very soon. We're initiating work programs on projects in the US particularly, and Argentina and in Australia. And we've been very busy on the M&A front, and we'll continue to do so. We've acquired 13 projects in 2 years. We're not done, and there's lots of M&A in the space. And I think we'll be at the forefront of it.
Thanks for sharing that.
Thank you very much. And Gwen, you've got the final question.
Hi, Phil. Nice to see you. Okay, so given what we were just talking about with the uranium space, we don't know how long it's going to take to sort of sop up the excess supply and for the next leg of the price move to happen, assuming that it's coming. I'm a believer in that. How do you balance, as a uranium stock, the competing forces, which is like, partly you just need to exist because it's such a small space and investors are going to look for something, but also you need to stand out. You want to maintain a tight share structure so that you offer your shareholders the best leverage, but you also want to advance assets and, like you say, maybe keep buying assets. So bigger picture, what is your corporate outlook on how to give investors the best exposure to uranium through Consolidated?
Yeah, I mean, look, I think our business plan has changed from acquiring and holding and not doing anything on these projects till we got much higher uranium prices to starting to advance these assets. So we will be spending money on our projects. There's low-hanging fruit on all of these assets. They were significant expenditure was made on them in the past, but they were never fully explored. So we think that's a place to add value in short order and for not a lot of money. And then I think it's M&A. We're going to continue to find assets, and I think our track record has shown that we can buy right, and then and by putting them into the portfolio, we can add value from what we paid for them.
Fair enough.
Well, very good. We're finishing up this particular session about 30 seconds early. Thank you very much, everyone. I'll reverse order for the judges next time. So Gwen, you'll be first for this last company. Abraham Drost is the Chief Executive Officer and Director of Clean Air Metals. Abraham, the floor is yours.
Yes, thank you very kindly. Good morning, ladies and gentlemen. Clean Air Metals was formed in 2019, came to trade in 2020 around the consolidation of two very promising mid-continent rift-related platinum, palladium, copper, nickel magma conduit deposits in mining-friendly Ontario near Thunder Bay, the Thunder Bay North project. Heretofore held in separate hands, this gave the unique opportunity for scale. The Escape deposit on your left was acquired from Rio Tinto, who discovered the Escape South high-grade zone. And the current deposit on the right was discovered by geologists Dr. Graham Wilson and Dr. Gerald Harper, and was drilled initially by TSX-listed Magma Metals in around the 2010 vintage, and was subsequently acquired and further explored by Panoramic Resources of Australia, who drilled 700 boreholes, and with a combined investment of our predecessors around the 100 million mark. And while economic at $500 palladium, the Panoramic's 2010 pit model required partial draining of Current Lake, a non-starter environmentally and with the local First Nation communities. Clean Air Metals has benefited from innovations in the mining method and metallurgy led by Clean Air Metals Executive Chairman Jim Gallagher, mining engineer and most recently CEO of North American Palladium at the sale of the Lac des Îles Palladium mine 60 kilometers to the northwest to Implats of South Africa. Jim's insights have led to publication of a new PEA on January 12th, 2 weeks ago, resulting in an economic base case supplying an initial 10 years of new mill feed in the Superior Basin mining camp. Camp is presently, of course, in production at two locations, the Lac des Îles Palladium mine and in northern Michigan at the Eagle mine operated by Lundin. Competitive dynamics around M&A in the camp are real, and sustainable economic development of a new mine is supported by the affected First Nation communities who have previously approved sustainable forestry harvesting in the area and are exposed to the equity of clean air metals. But wait, there's more. The deposits of Thunder Bay North are examples of Proterozoic mid-continent rift-related mineralization with platinum and palladium in a 1-to-1 ratio and copper and nickel in a 2-to-1 ratio. This provenance and metal endowment naturally led the team to consider the rift-related Norilsk mineral deposit model to guide exploration at the Thunder Bay North project. Norilsk, of course, is a 100-year mining history and is well understood, in contrast with 12 years of exploration at Thunder Bay North. The two projects compare well around structure and given the similarities between the Talnak fault on your right and the escape fault on your left, and stratigraphy. The magma conduits shown here, the current intrusion, the escape intrusion, and the Karalak intrusion are remarkably similar in morphology. The major difference, of course, is the presence of economic concentrations of massive
Abraham,
sulfide.
that's your time. I'm
Thank
sorry.
you very much.
My apologies. Sorry that we have to stay strict by that 3-minute rule, but thank you for your presentation. Very nice. Gwen, you have the first question.
Thanks very much, Ellis. Hi, Abraham. So you just released a PEA. There's always, as an investor, a question about when to enter a story, like before or after major event. PEA is clearly one of those. My question is, what's happening this year that would make me want to enter now that that event has just passed? And I'm guessing it has something to do with what you were talking about when you were cut off at the end.
Yeah, look, next step here, Gwen, is chasing massive sulfide targets. We have an economic model in the conduits. The model suggests that massive sulfides, such as what you see in front of you, which is Norilsk head grade material, in fact, is located just outside the conduits in the location of the Escape Lake Fault. That'd be this area here. So we'll be drilling some very nice low resistivity targets this winter. That is the catalyst in 2022 as we go into PFS on the conduits based on the PEA.
And how much confidence do you have in resistivity targets returning positive massive sulfides given experience on the project?
That's a great question. This is the method that Nornickel uses at Norilsk, and they're currently exploring at 2 kilometers depth using the same techniques that we use, looking for low resistivity targets. We think we're onto something.
Fantastic. Great questions, Gwen. Jennifer, please.
Hi. Yeah, so my question relates to the broader market. I'm wondering if we can discuss the hydrogen applications and what are the current applications happening in the economy right now, and how do you integrate your PGMs into this process?
Sure. Well, look, it's not just us, but Johnson Matthey is extremely bullish on PGEs going forward, particularly in low carbon and clean energy applications, such as the hydrogen fuel cells. The technology already exists. It's well developed around heavy haulage. Mine trucks, trains, buses, and so forth, but also very much in passenger vehicles. I was in Vancouver last month. I noticed that you can get hydrogen at the pumps at the local Schell station for fuel cell vehicles. The only metals to be used in fuel cells are PGMs, because they are the only metals that freely give up an electron on the combination of hydrogen and oxygen to form water vapor and electricity in a hydrogen fuel cell vehicle. So incredibly important. And we believe Thunder Bay North will be part of that global supply chain in due time.
Great question, Jennifer. Thank you very much. And fantastic answer as well. Warren Irwin, you're next.
Okay, there we go. I muted myself before I started speaking. So Abraham, can you, I'm a little confused as to what type of structure you're looking at. Are you looking at a nickel predominant structure here with PGMs as credits, or what do you think will be the primary economic metal in your discovery?
Yeah, well, that's a great comment. We're estimating based on the PA in the conduits, Warren, that PGs will dominate, running about 70% to 75% of revenue, based on the 2-year trailing average price deck that we've incorporated. Massive sulfides, okay, what you're looking at here, I mean, when you have 2.5% sulfide nickel, almost 5% copper, 14 grams PGs, it could be the reverse. In fact, it could be copper and nickel which lead the way on revenue.
Yeah, with respect to nickel, I've had some really good luck in my career with VTEM. What is your airborne EM telling you? And are you using downhole EM at all to try and figure out where your structure is going?
Yeah, well, in essence, we led the way with an MT survey. First of all, we do have airborne EM conductors in the system, in the current conduit. But the model suggests that, and in fact, we have a massive sulfide hit there as well as an escape. But the big onions are at the base of the intrusions in what we call the feeder zone areas. These are the areas that we've surveyed with MT or magnetotellurics. Following the Nor-Nickel example, what Nor-Nickel does is it drills on these low resistivity features that are MT anomalies, and then it uses borehole EM to site in the next hole into the massive sulfides. It's a time-tested formula that they've been using very successfully for years. And so we have, in fact, mimicked that, and we're doing that work now. And now that we have 3 feet of ice in the area, it was -28 this morning, we'll be pulling the drills on these anomalies very shortly, and we have real targets.
Thank you very much. Great question, Warren. Dave Lotan, it's yours.
Abraham, I see the structures. I'm just wondering, I think that one of the key ingredients at Norilsk is are these differentiated mafic sills. Yes. that sort of form these gull-wing shapes that trap the sulfides underneath. Do you have evidence of not just mafic intrusions, but that sort of sill structure and differentiation as well?
Yes, in fact, stratigraphically, although different in age, obviously Thunder Bay North is Proterozoic in age, about 1 billion years, and the Norilsk deposits are Triassic, which is much younger Phanerozoic mineralization, but they both are related to large rift structures. And stratigraphically, the conduits are dead ringers for each other, with an outside melt rock, an internal, the next layer being gabbroic, and then the pay zones are ultramafic peridotite with the sulfide mineralization, the copper nickel olivine mineralization. That's what you see at Norilsk. That's what you see at Thunder Bay North. They're quite similar. It's striking, actually. It's a process of thermal erosion that forms these things.
Fantastic question. Thank you very much, Dave. And again, Abraham, great responses. David Twist with our final question.
Yeah, just tell me your market cap today. You said 100 million that was spent by predecessors. I'm interested in your market cap today. Secondly, what are you going to do? Are you planning to produce a concentrate and sell that concentrate to a nickel smelter, or what do you plan to do?
Market cap today, 35 million Canadian. In terms of concentrate, yes, very floatable copper nickel, very payable copper nickel, to which the PGMs report on a medium grind. This is a straight, as Jim Gallagher has said many times, and I'll parrot him, this is straightforward, crush, grind, flotation, and dry stack tails. This is straightforward. And again, very sustainably operated, with support from our First Nations partners. At the end of the day, we see tremendous upside here now that the PEA is out. There was always a doubt in the market about, Rio sold it, Panoramic sold it. How can these guys possibly do anything with this? Well, I think the PEA demonstrates that question.
Yeah, but would your concentrate go to one of the nickel smelters in Canada, or would you build your own?
Yeah, well, the PEA is on indicative terms from both Glencore Valley and some German concerns.
Okay. Thank you.
Fantastic questions, everybody, and wonderful presentations by each and every company. Thank you very much, Abraham Drost with Clean Air Metals. Really impressed with everyone today. We are going to take the next 10 minutes and really cast our votes, or you'll be casting your votes, and hopefully I won't have to make a tiebreaker. We have 5 judges, so I will give everyone at least 2 minutes, well, no more than 2 minutes, to comment on why they're selecting each of the companies, and maybe why they're not going with the other companies. It's entirely up to each particular judge. Just to review the companies one more time, we've heard from Glenn Jessome with Silver Tiger Metals, Paul Wessels with Western Copper and Gold, Phil Williams of Consolidated, Uranium, and finally Abraham Drost with Clean Air Metals. And we will start the vote casting with David Twist.
I'd probably give my vote to Cleaner Metals. They, on the basis they seem to be very undervalued relative to the size of the project they have and the amount of money that's been spent. They've still got a long way to go, but I think they'd get my vote. My thoughts on the others were uranium. I don't like investing in a commodity that's still underwater, and I think the price, and the speaker said the price would need to rise. On the silver project in Mexico, I never got the what the feasibility study was saying. So I don't know what the value was or what the mine plan is. And on the copper project, clearly the NPV and the capex requirements were sort of out of kilter, and it is a big capex number for a small company. So on balance, I'd probably go with Cleaner Metals. I think they would offer an investor the best upside.
Thank you very much, David. Next, I'd like to go to Jennifer Schell with your vote.
Yeah, really strong companies. Thank you. And great presentations that I'd love to follow up with each and every one of you. My vote goes to Consolidated Uranium. I think that you have an excellent management team. It's a process that can be replicated. You have, a really great working relationship and a mill that gives you a competitive advantage to put everything into production should you need to. Because who knows what's going to happen in the next year or two with, these inflationary concerns and energy requirements. So that's my vote. So congratulations.
Thank you very much, Jennifer. Gwen Preston, I'd like to have you cast your vote as well right now, please.
Thanks very much, Ellis. This is hard. I have like pros and cons list on all of the companies. It's hard. I agree with the undervaluation argument for sure with Clean Air that David mentioned. When you just look at the 4 share price charts, there's 3 that are, bottom left to top right, and there's 1 that is the other direction. So that argues that there's, an upside opportunity with Clean Air that is distinctive. That said, it's primarily an exploration bet. That said, it's an exploration bet that's grounded in nickel and PGEs, which is pretty cool because it's hard to find it's hard to find stories out there with a lot of nickel and PGE exposure. So I really like that about that asset. That said, I love uranium. I love investing in a commodity that's underwater when I think that there's fundamental reasons for that commodity to rise, which I think is structurally in place right now in the uranium space. For Glen's company, for Silver Tiger, I think there is an analog there in Silvercrest that is probably quite real. And the management's track record of defining deposits and then turning them into mines in Mexico is almost unparalleled. Like they are very, very good at doing exactly that. And I love copper. So then there's then there's Western as a copper story. And the arguments, I really like how Paul made 4 very clear arguments. He told us what he was going to tell us, and then he told us what he expounded on each of those with 4 very clear arguments, and copper is a compelling argument within them. So which one am I going to choose? If it was going to be for $1 million to put in, I might also go with Clean Air, which, full disclosure, they're the one stock here that I don't own.
Thank you very much. Really, you kept us in suspense there for a bit there, Gwen. Very nice. Warren, please tell us who you'd like to select for that $1 million investment.
Oh, it's going to be kind of boring here. I'm going to go with Consolidated Uranium. I know that the complete and total disarray we have in the uranium market now, and we know what's going on in China. They're largest build out of the world of nuclear reactors, and I know the production problems about Cigar Lake, MacArthur River, big problems. And we all know what's going on in Kazakhstan. If I was a utility buyer, I would be shaking in my boots right now, frankly. I think we could have just a rocketing uranium market here in the next few years, and it may take a few years. And you know, Phil's sharp enough to have been, you know, he and I were both in the last uranium boom. We know how money's made, and money's made is owning these marginal cusp properties. So when uranium does inevitably spike to $60, $70, these things go exponential in value. So that's kind of where that's where I'd be putting my $1 million here over the next little while to make some serious dough. Clean air metals, reason I didn't go with them is I'm just not a super huge fan of PGMs because I'm not a fan of hydrogen vehicles. I think there's too much energy lost in the transformation to them. There will be some applications, but I also look at the tens of millions of cars built every year that will no longer need catalytic converters, so they won't need the platinum and or palladium to make those. So I see demand destruction and uncertain demand for hydrogen vehicles. Other people have different views. Silver Tiger, I kind of liked it. If I was more bullish on silver, I'd jump in there and roll my sleeves up, check it out. Western Copper, you know, it seems like it's set itself up for a tremendous return if we get the $10 copper, as I expect at some point in the future too. So the good thing about Western Copper is the crappy grades. Like, it's a marginal project right now, from what I could tell. And those are the ones that perform the absolute best when we get a good copper market. And we all see the demand numbers are insane going forward. And I don't think we're going to be here at $4 or $5 copper. So I could see in a few years where Western Copper could be a real darling and considerably more economic than it even is today. So that's my quick summary. But I'm a consolidated uranium guy, I think, right here.
Really wonderful analysis from everybody so far. Dave Lotan, it kind of rides on you right now. I hope. So please give us your vote and your reason for that vote.
Sure. Well, I've owned at least 3 of these projects in prior companies. I owned Magma when it got taken over by Panoramic, and I owned Strateco as it was going through its unfortunate wrestling matches with First Nations and the Canadian government. I thought Matoush was a fantastic project. I like Phil's strategy. I like the way he organizes his companies. I like his approach. I'm not going to go for that at the moment. I loved Magma. I loved the discovery. I don't see the obvious avenue for moving that forward without tremendous dilution, so I wouldn't choose clean air. I'm a huge believer that exploration is where all the value is created, and I think that Glenn has a fantastic discovery on his hands with this new shale horizon, and I think that could be really big. So I'm tempted, but I don't think Glenn should build it. I think Glenn should sell it. Although Silvercrest did do that. Copper strategic. I think government policy is driving copper to levels that we can't even imagine. I like to get in front of government policy, so I'm going to choose Western.
Thank you very much. I appreciate all of your analysis. It was very, very thorough. And here's the tally right now. We have Silver Tiger with 0 votes right now, Western with 1. We have Consolidated Uranium with 2 votes, and Clean Air Metals with 2. So unfortunately, I'm not looking forward to this. I guess I'm going to have to cast the deciding vote here, and not without extreme prejudice. I mean, I'm a shareholder of Western Copper, and they're also a sponsor of my program. I've been to the Silver Tiger site back years ago, probably over 10 years ago, when it was El Tigre. But I can't vote for either of these companies because they're not involved in the tiebreaker. I'm also the president of a battery metals company. I won't mention who it is, so I'm biased, and I'm really in favor of that. Although I do see I understand, and I've understood the problem with hydrogen leakage over years. I mean, you don't see a ton of hydrogen cars on the road, but there's a reason for that. Also, I really believe in uranium. You know, I'm an investor and a shareholder of a company that I won't mention them, but they're in the Athabasca, and you know, there aren't many choices in the uranium sector right now. It doesn't matter really when it's going to not just pop, but have a wave, whether it's next year or 5 years from now. There's not many companies in the space, so it just sort of makes sense to you know, jump into a uranium company. Having said that, I'm a big believer in nickel. and PGMs. You know, we're not rid of these catalytic converters yet. So I'm going to put my vote in for clean air metals. And that's where, and I'm also adding a million fake dollars to the tally right now as well. So thank you, everybody. Amazing presentations. I would choose any of these companies. So it was really hard to make a vote. And on behalf of Minds and Money, I'd like to thank Andrew Thake and Elke Choi and Brooke for asking me to host today. It's been a real pleasure, and I hope to see you folks somewhere in person this year.